Welcome to this special webinar on the new Import One-Stop Shop brought to you by Streets Chartered Accountants. I'm James Pinchbeck, the firm's marketing partner, and I'll be hosting this session in which I'm joined by our VAT consultant, Jane Deeks, along with Paul Quigley from Accenture Global Services. Welcome, both of you.
Thank you.
Thank you.
Currently, EU and non-EU sellers selling goods online to EU consumers can import these goods into the EU directly to the consumer, import VAT-free if their consignment of goods or good is valued at €22 or below. This treatment will end with effect from the 1st of July 2021, when all imports will be subject to EU VAT. This presentation seeks to provide businesses with insight to the changes, along with advice and guidance as to the steps needed to be taken once the changes come into force. And in particular, we will cover a short introduction to Accenture, the new EU VAT rules from the 1st of July 2020, and how Streets Chartered Accountants and Accenture can help you. It now gives me pleasure to pass over to Paul Quigley. Welcome, Paul.
Thank you, James. Hello, everyone. So I'd like to start by just saying a few words about who we are here at Accenture. So Accenture is a tax support firm that has a unique solution in so much as we offer a global one-stop shop which covers over 40 countries. Our areas of expertise are principally international VAT and indirect taxes, but we do cover other aspects of international tax as well, in conjunction with our network of partners. One of the benefits of using Accenture is that we're able to offer one key point of contact, and we provide a personalized service and a cost-effective service, because really the only other businesses in the market who offer a similar service offering and a similar level of coverage are the big four firms. So in terms of our key services, well, as I say, our principal focus is on international VAT. And the first service we offer is international VAT compliance. So helping businesses to register for VAT and other indirect taxes outside of the UK, and helping them to prepare and file the various declarations that are required. In conjunction with that, we offer VAT consultancy. So this is where our team of highly experienced consultants, most of whom come from a Big Four background and have industry experience, are able to provide input and advice into any questions regarding international VAT. We also offer VAT recovery services. So this is where a business in the UK, for example, may have incurred VAT in other countries that they would like help to recover. And as I say, in addition to providing VAT advisory services and compliance services, increasingly we touch on other areas of international tax, customs and excise, transfer pricing, and trading is also one of the key service offerings that we provide.
Okay, so who is this presentation aimed at? Well, it's aimed at businesses that are intending to sell goods to private individuals in the EU. Now, they may sell these goods via their own website, via an online marketplace such as eBay or Amazon. The goods are located in the UK or in another non-EU territory at the time of sale, and then they'll be shipped directly to the EU. So, for instance, there's a bit of an example here for Coronation Street fans. Will see that this is Weatherfield, England, and it's Baldwin's Casual Wear Limited. So they're selling their clothing via their own website to private individuals in various different EU countries. They're also selling those clothing via Amazon and eBay. So this would give quite a few different EU scenarios of how the VAT is treated, as well as the EU, as well as the UK VAT position. So because of Brexit, we've resulted in a two-tier system that needs to be considered. So the first thing to consider is how the UK VAT system will treat these goods. So from the 1st of July, as James said in the introduction, the low value consignment rules will be, relief I should say, will be withdrawn from the 1st of July. So at that point, any goods sold directly and shipped directly from the UK into the EU will be within the scope of UK VAT. However, they'll be regarded as a zero rated export, and any sellers will need to ensure that they've got evidence to prove that the goods have left the UK, and that evidence should usually be obtained within 3 months of the goods leaving the UK. The value of the goods should be included in box 6 because this is a taxable supply from the UK and therefore should be shown as in the box 6 on VAT return. Now, this is again a Weatherfield example, Baldwin's Casual. So they sell their goods via the 3 different means, Amazon, eBay, directly from their website to private individuals, in this case in Germany. So the sale of the jeans, so there's 2 pair of jeans being sold, and these amount to €140. The shipping cost comes to €20, and therefore the total is €160. So there's no VAT because, like we said, this will be treated as a zero rated export. So the gross value that would be shown on your VAT return in box 6 would be €160. So this then moves us on to when the goods arrive into the EU, what exactly will happen. Now, this is where I'm going to hand you over to my colleague Paul, who is the international expert and will be able to give you all the details of the new rules that will commence from the 1st of July. Thank you.
Thank you very much, Jane. So now we'll come on to look at how these same sales will be treated from the point of view of the EU VAT system. So again, as both James said in his introduction and Jane reiterated, one of the main changes coming into effect from the 1st of July is the abolition of this so-called low-value consignment relief. And low-value consignment relief was where a business outside of the EU could sell goods valued at anything up to €22, and the importation of those goods would be exempt from VAT when they come into the European Union. So that is being scrapped with effect from the 1st of July. And what that means is that all commercial goods coming into the European Union from the 1st of July onwards will now be subject to import VAT. And the import VAT will either be collected at importation, and that will be the default, or it will be collected on the sale of the goods if this thing called the Import One-Stop Shop, or IOSS, is used. Or in fact, VAT may be collected both at importation and on sale if a business chooses to apply the normal VAT rules. And we'll talk about what each of those scenarios looks like as we go through the presentation. Another very important change that's coming in on the 1st of July is that online marketplaces such as Amazon and eBay will become responsible for accounting for VAT in certain circumstances rather than a business itself. So we're going to start by talking about direct sales, and what we mean by direct sales are sales which a business makes via its own website and not via online marketplaces such as Amazon and eBay. We'll come on to talk about the VAT treatment of sales made via online marketplaces a little later in the presentation. So in terms of direct sales via a business's own website, what are the options? What are the choices come the 1st of July? Well, the first thing that a business can choose to do effectively is to do nothing. The second is to register for the Import One-Stop Shop, or IOSS. And the third is to apply the normal VAT rules. So moving on to talk about the first of those options, which is to do nothing. So The thing about the import one-stop shop is it is optional. Businesses do not need to register for import one-stop shop. It is not mandatory. So if a business does nothing, what will happen post the 1st of July? Well, what will happen when a package is sent from Great Britain into the European Union is that the customer will be asked to pay import VAT and potentially also customs import duties, depending on the value of the goods, in addition to the price paid at checkout and before they receive the goods. As well as being asked to pay the import VAT and potentially customs import duties, the customer will most likely be asked to pay a handling fee or a customs clearance fee to the carrier or to the postal service. And the point about the customs clearance fee is that's generally a fixed fee, which is not linked in any way to the value of the goods or the value of the import taxes that are levied. And therefore, the customs clearance fee might be of the same value, if not more, than the actual import taxes themselves. If the customer is left to pay the import taxes, then the delivery of the goods may be delayed because the import taxes need to be paid before the goods can actually be released by the carrier or postal service. And for those reasons, customers may actually refuse to accept delivery of the package. They weren't expecting to pay the additional taxes. It's taken quite a long time for them to actually get the goods, and they simply say, sorry, but we no longer want to take delivery. So here's an example of a business doing nothing. We'll check back in with Baldwin's Casuals, and we have the same example that we saw previously. So the business is selling 2 pairs of jeans for 140 euros. And incidentally, we've put the values throughout the presentation in euros for simplicity's sake. On top of the value of the goods, the business is charging 20 euros of shipping, total net value, total net sale of 160 euros. And as Jane says, that would be reportable in the UK VAT return in box 6 as the value of the net zero-rated export sale under the UK VAT system. And of course, it would be the sterling equivalent of those values. We see the goods being sold via the business's own website, baldwinsjeans.co.uk. So again, here we're not talking about sales made via online marketplaces yet. And the goods are shipping from, in this case, England, so from Great Britain. And the relevance of that is that goods shipping from Northern Ireland into the EU would be subject to different rules under the terms of the Northern Ireland Protocol and the Brexit trade deal. And the goods are going to a private individual in Germany. So the customer paid 160 euros at checkout, and now they're going to be asked to pay an additional 30 euros 40 cents of German import VAT. And import VAT is due at the rate of the country of importation. So here we have the goods coming into Germany, and hence 19% German import VAT. On top of the import VAT, the carrier is charging a customs clearance fee, which is a fixed fee of 15 euros, as an example, although that will vary from courier to courier. And therefore, the customer, in addition to the 160 euros they paid at checkout, is being asked to pay an additional 45 euros 40, which is almost an additional 30%. So not great from the point of view of the customer experience, because most customers would not be expecting to have to pay anything over and above what they paid at checkout. So this is what will happen if a business does nothing. So what's the alternative to doing nothing come the 1st of July? Well, the alternative is to use the import one-stop shop. So the import one-stop shop is a new scheme, again, which is optional for businesses to apply. But if a business does choose to register for the import one-stop shop, then it must be used for all relevant shipments to the European Union. What we mean by relevant shipments, well, it can only be used for consignments up to 150 euros in value, and it cannot be used for consignments that contain excise goods. So typically tobacco or alcohol, and that's the same whether the package contains only excise goods or it contains excise goods in combination with other goods. IOSS cannot be used for excise goods. And there's no threshold with the import one-stop shop because again, all goods, all commercial goods brought into the European Union from the 1st of July onwards will be subject to import VAT, unless of course the goods are zero rated perhaps or exempted from VAT in the country of importation. And an example of that would be qualifying children's clothing shipped from England to the Republic of Ireland. So if the import one-stop shop is used, then there are two major consequences of that. The first is that the importation of the goods will be exempt from VAT. And secondly, that VAT will be due on the sale of the goods at the time of payment, payment by the customer, and importantly, at the rate applicable in the customer's country. And by customer's country, we mean the EU country to which the goods are shipped. What are the benefits of using the IOSS? Well, the customer pays a single VAT-inclusive price at checkout, which means that there are no nasty surprises when the goods are delivered. No VAT to pay at importation, because the import is exempted when IOSS is used, means there's no delay in getting the goods to the customer. And the two things combined mean that we have the best possible customer experience, and that can only help a business to maximize its sales into the EU market, whilst at the same time minimizing the cost of VAT compliance. Under the old VAT rules, when the UK was still a part of the EU, online retailers in the UK could find themselves needing to register in up to all 27 EU member states. With the IOSS, businesses would only ever need to be registered in one EU member state. So how does the IOSS work? Well, the IOSS is a single registration in one EU member state that is used to declare and pay VAT on goods sold to private consumers in all 27 EU member states. Single registration with a single monthly VAT declaration and a single monthly VAT payment, both of which are made to the country of registration. And the due date for filing and payment is the last day of the month following the reporting month. So VAT due on sales made in July 2021, for example, will need to be declared and the VAT paid by the 31st of August 2021 at the latest. Now, in order to register for the import one-stop shop, businesses in Great Britain currently need to appoint an EU-based intermediary. So at the moment, businesses in Great Britain are not able to register themselves for IOSS. They need to find a provider who is able to offer this intermediary service to them. And that is a service that we here at Essentia can provide. And the country of registration is therefore dictated by the country of establishment of the intermediary that the business chooses to use. So in the case of businesses who use Essentia, then our intermediary company is established in France, and therefore the country of registration for IOSS would be France. When we register a business, the business is assigned an individual identification number. It consists of 12 characters, starts with the prefix IM, followed by 10 alphanumeric characters. And that identification number needs to be provided by the business to the courier or postal service as part of the advanced electronic data that is transmitted to them about each shipment. So as I say, VAT has to be declared on sales at the rate applicable in the customer's country at the time of payment. So this is when the customer pays for the goods. And we'll take a look at an example that pulls all of these things together in a moment. So one thing that a business who chooses to use IOSS will need to know, of course, is what rate of VAT applies to their products in potentially all 27 EU member states. Of course, it depends if the business is selling and shipping to all of those countries. And again, that's something that Essentia can help with. To give you an idea, there are currently 10 different standard rates of VAT in force in the EU, ranging from 17% in Luxembourg to 27% in Hungary. The only standard rate in that range that currently no member state has is 26%, but there are many more reduced rates. Prices, of course, will need to be deemed to be inclusive of VAT, and therefore information about what rate to apply will, of course, be important to enable a business to understand what margin it will make on any given sale to any given country. So, as I said previously, the IOSS can only be used for consignments up to 150 euros in value. And the legislation refers to the intrinsic value of a consignment not exceeding 150 euros. Intrinsic value is defined as the price of the goods themselves when sold for export to the customs territory of the EU. And if transport and insurance are certified on the invoice, then they can be excluded from the value, as can any taxes, charges, or indeed the VAT itself. So let's take a look at an example that pulls all of those things together, hopefully. Again, we're talking at the moment only about direct sales made via a business's own website. So here, rather than do nothing, our business is choosing to register and use the IOSS. So what happens here is we can see the value of the goods again is 140 euros. The shipping is separately identified still at 20 euros, meaning that the total net sale is still 160 euros. But the intrinsic value of the shipment is 140 euros because that is the value of the goods themselves, and we can exclude the shipping because it's separately identified. And therefore, this particular sale, although in face value is more than the 150 threshold, does actually qualify for the import one-stop shop. In all of these scenarios, under the UK VAT system, there is no UK VAT because the sale is zero rated as an export sale. But here we see German VAT of the ship to country, VAT of the ship to country, which in this example is German VAT, needing to be accounted for as output tax based on the time when the customer pays for the goods. And therefore, the VAT inclusive retail selling price on the website would be 190 euros 40. So if the IOSS is used, then the customer will make the payment and the VAT of 30 euros 40 will be accounted for and declared through the IOSS returns. And then the importation of the goods will be exempted from VAT. If IOSS is used, there's no obligation to issue a VAT invoice. But if a business chooses to issue a VAT invoice, then it will be the rules of the member state of identification that will be applied, which again, in the case of businesses who use Essentia, would be the French VAT invoicing rules. Whether a VAT invoice is issued or not, it's recommended that a commercial invoice is issued, which shows the price paid by the customer in euro, and separately for each VAT rate, the amount of VAT charged to the customer. And if the IOSS is used, then records of all sales must be kept for 10 years to allow the EU VAT authorities to audit the declarations. So that's sales made direct via a business's own website. What about sales now made via online marketplaces, such as Amazon and eBay? Well, where similar sales are made, not via the business's own website, but via a qualifying online marketplace, then it's the marketplace's responsibility from the 1st of July to declare the VAT due on those sales. And by similar sales here, again, as a reminder, we're talking about sales of goods to private consumers in the European Union in consignments up to 150 euros in value, where the goods ship from a non-EU location directly to the consumer in the EU. And again, one of the reasons we refer to Great Britain rather than the UK is because goods shipping from Northern Ireland to the EU will be subject to different rules. So by Great Britain here, we're talking about goods which ship from England, Scotland, and Wales, essentially. And in this scenario where the marketplace is liable to report the VAT due on the sale, then even though, of course, from a legal and commercial point of view, there is only ever one sale made by the business to the EU consumer, from a VAT point of view, two sales are recognised: a deemed sale from the business to the online marketplace and a deemed sale from the online marketplace to the consumer. So in terms of the first one of those two deemed sales, the deemed sale from the business to the marketplace, well, that will be outside of the scope of EU VAT, and therefore there'll be nothing for the business to report in the EU in respect of such sales. And therefore a business who only makes this type of sale via online marketplaces would actually have no EU reporting obligations whatsoever. If the marketplace is using the import one-stop shop itself, and if the business is responsible for transporting the goods to the consumer, as opposed to the marketplace fulfilling the order, then when the business sends the package from England to the EU consumer, then it would need to communicate the marketplace's IOSS identification number as part of the advanced customs data. So what that means is that if a business sells both via its own website and via an online marketplace, and if the business decides to use the IOSS for its own direct sales, then when it sends a package where the goods were sold via its own website, it will need to give the courier company or the postal service its own IOSS identification number. Whereas if the sale was made via an online marketplace, then the business will need to give the courier or postal service the online marketplace's IOSS identification number. So let's check back in with Baldwin's Casuals and take a look at that. So down the left-hand side, we see exactly the same figures. The business, from the point of view of UK VAT, is making a zero-rated export sale to the value of 160 euros sterling equivalent. Here the sale is being made via an online marketplace, and the intrinsic value, again, is less than 150 euros because that is the value of the goods, excluding the separately identified transportation costs. So the VAT that is due on the sale, and again, sales from the 1st of July will always be subject to VAT at the rate applicable in the customer's country, the ship-to country. The VAT is due at the standard rate, standard German rate of 19%. That is 30 euros 40. And therefore, the marketplace will pass back the 160 euros net to our business in England, less of course its marketplace fees. And if the IOSS is used by the online marketplace, then the importation of the goods into the EU will be exempted from VAT, meaning that there's only ever one amount of EU VAT accounted for in relation to this transaction, and that is VAT on the sale, and it's VAT which is accounted for by the online marketplace as opposed to the business itself. So far we've talked about sales with a value of up to 150 euros in value. But what if a business makes a sale for more than 150 euros? What is the VAT treatment there? Well, firstly, the IOSS cannot be used for consignments greater than 150 euros in value. And therefore, even if a business chooses to register for IOSS and use it to report and declare VAT on these lower value sales, it cannot use it for sales in excess of 150 euros. And equally, online marketplaces are not responsible for reporting sales greater than 150 euros either, where the goods ship from a non-EU country, which is the scenarios that we've been looking at so far today. And therefore, the default position for sales greater than 150 euros is that the customer will be asked to pay the import charges. And again, that means import VAT. It could mean customs import duties now, because 150 euros also happens to be the customs import duty exemption threshold. So up to 150 euros, goods are exempted from customs import duties in the EU, even if in principle they would normally be taxable at a positive rate of duty. But because now we're talking about sales greater than 150 euros, then in addition to customs import VAT, the customer may also be asked to pay customs import duties, as well as the customs clearance fee. So what are the alternatives to that? Well, the alternative to that would be for the supplier, so for our business over here in England, potentially to apply the normal VAT rules and to act as the importer of the goods into the EU. And that would involve the business needing a standard VAT registration in the customer's country, and the business would pay and reclaim import VAT, and then VAT would be chargeable on the sale at the rate in the customer's country. Now, of course, if the business chooses to apply the normal VAT rules and to register and charge VAT in consignments valued at more than 150, what does that mean for the lower value consignments? Well, again, if the import one-stop shop is used, then it must be used for all eligible sales. And this would mean that a business would have a dual treatment. And essentially, it's going to have a dual treatment anyway, because for the lower value sales, either the customer will be asked to pay the import taxes, or if the one-stop shop is used, then VAT will be chargeable on the sale, or for consignments greater than 150, again, the customer will either be asked to pay the import taxes, or the business will be registered and charging the VAT. Question, could the normal VAT rules also be applied to consignments up to 150 in value? Well, in principle, it could. But of course, if a business chooses to apply the normal VAT rules, then that could lead it needing to be registered in up to 27 member states. So far, we've only talked about sales to private consumers. What do these changes mean for sales to business customers? Well, strictly speaking, the import one-stop shop is for reporting eligible sales made to private consumers and other non-taxable persons. And what that means is that if a business also makes sales to business customers in the EU, then those sales should follow the normal VAT rules. And for B2B sales, the VAT treatment will depend on who acts as the importer of the goods into the European Union. And basically, if the business customer acts as the importer, then the supplier should have no EU reporting obligations. But if the supplier here in England acts as the importer and sells on a delivery duty paid basis, then it may be pulled into EU VAT registration reporting obligations, but that will depend on the country in question. So we'll briefly touch on some other changes being introduced from the 1st of July. The first one of those is the extension of the existing non-union one-stop shop scheme for telecommunications, broadcasting, and electronically supplied services to all business-to-consumer services that are deemed taxable in the EU. So this is a scheme that was introduced back in 2015, and that is referred to today as the mini one-stop shop, or MOS. And that special scheme allows businesses outside of the European Union to register in a single EU member state in order to report VAT due on today certain types of services only. And those services are telecommunications, broadcasting, and most commonly electronically supplied services. That scheme is being extended from the 1st of July to allow non-EU businesses to report VAT that is due on all services supplied to consumers in the European Union. And as a result, it will change from being referred to as the mini one-stop shop to simply being referred to as the one-stop shop, or non-union one-stop shop. Another change being introduced from the 1st of July is the introduction of a union one-stop shop scheme for intra-EU distance sales of goods. So this is where a business holds a stock of goods within the European Union, let's say in a third-party logistics warehouse in the Netherlands. And when the customer places an order, then the goods ship from EU member state 1, in our example here, the Netherlands, to EU member state 2, so for example, to a private consumer in Germany. That is an intra-EU distance sale because the goods are going from one EU country to another. And with effect from the 1st of July, businesses, instead of needing to potentially register in all 27 EU member states, will be able to register in a single EU member state in order to declare and pay VAT due on all such sales in a single country. And again, like the import one-stop shop, those intra-EU distance sales will become taxable at the rate of the customer's country from the 1st of July onwards. And effectively, there'll be no thresholds. So the old distance selling thresholds of 100,000 euros and 35,000 euros that you may have heard about or may have been subjected to, they will no longer apply from the 1st of July onwards. And lastly, we talked about online marketplaces being responsible for reporting VAT on business to consumer sales made by businesses outside of the EU, where the goods ship from a non-EU location to an EU consumer directly, where the consignment value is up to 150 euros. Well, if a non-EU business holds stock within the EU, so perhaps in one of Amazon's EU fulfillment centers, so the goods are sitting in the EU at the time of sale, then Amazon will actually, and any online marketplace, of course, will be responsible for reporting the VAT on those sales. So again, that's an intra-EU distance sale, a sale made from an EU stock holding to an EU consumer. Online marketplaces will be responsible, irrespective of value, for declaring the VAT on those sales where the supplier is from a non-EU country. So how can Streets and Essentia help you make sense of all of this? Well, the first thing we can do, of course, is to discuss your specific circumstances, because what we find is every business is a little bit different in terms of how they're selling, which couriers they're using, or which postal service they're using to get the goods to the consumer. Are they only shipping from outside of the EU? Are they also holding stock within the EU? So we can discuss your specific circumstances and help you to understand how these new rules will affect your business in particular. And as part of that, of course, we can help you to determine if registering for the import one-stop shop is right for you, because it's certainly not right for every business, particularly given this threshold of 150 euros. Should you choose to register for the import one-stop shop, however, then we can act as the EU intermediary, meaning that we can register you for IOSS and file those monthly declarations and make those monthly payments on your behalf. And again, as I say, in our case, that would all happen in conjunction with the French tax authority. And of course, where IOSS is used, then one of the things as a business you need to know is what rate of VAT is applicable to the products that you sell in as many EU countries as you actually sell and deliver goods to.
Thank you, Paul and Jane. If having listened to this presentation, you've got any further questions, then please do email or call your usual Streets contact, emailing info@streetsweb.co.uk, or do visit our website, streetsweb.co.uk. All it now leaves me to do is to conclude the presentation, and I would like to thank the speakers, Paul Quigley from Essentia and Jane Deeps, our VAT consultant, for providing such an insightful presentation on what I thought was a relatively simple topic and would be relatively brief, but obviously it's much more complex, as many businesses and clients are facing. The concept of an import one-stop shop, and I quite like the abbreviation or acronym IOSS. So thank you very much indeed. And finally, thank you to you for listening to this presentation, and we trust you found it useful and informative. Thank you.